So hey everyone, as promised, we're going to give you a trade breakdown of turns out to be a 1 to 80 as of right now, risk to reward trade. And I know most of the time when you see these sort of things, it is very much trying to say clickbait you or draw you in, and sometimes maybe unrealistic. Don't get me wrong, maybe sometimes it's absolutely sound knowledge and just there to help as well. So don't just putting that out there that this particular breakdown is a fantastic trade. The reason why it yields such a high risk to reward is you're able to take more of a scalping style entry, so like a micro style entry on a macro analysis, so a higher time frame analysis. And that's essentially how you would realistically achieve a high risk to reward trade, is having a deep understanding of the structure and where you are in the market, and how you're entering and where you're targeting essentially. So let's take a look. So on EUR USD, now for the entry we will bring price back just to make it easier when we're going through the time frames. So we'll bring price back to about here, okay, and then we'll take a look overall where we are in structure. So as we can see on the daily time frame here, we've broken to the upside, okay, very discreetly. So it's not really a clear break, something we'll keep in mind. If I just put this on properly for you, there we go. So as you can see here, look, absolute decimal place breaking the high there. So not the cleanest break, however, something we do definitely take into consideration. Let's just jump to the weekly quickly as well. We can see again we are still in a bullish scenario at the moment, because as long as we stay above this high here, okay, so I'm just going to change this to arrow. As long as we stay above this high, this low, sorry, and we don't break this high, we're still bullish, right? We're still bullish. Now that can be confusing, but at the end of the day, this is our structural low. Once this breaks, however, because we have had a discounted pullback, a significant pullback, once this breaks, then we can be considered bearish, and we should expect price to come to at least these lows, if not even slightly lower. But until then, we are still in a bullish scenario. Now, as you can see, price has failed to break these lows on two occasions. Once when it made this higher low here, which didn't lead to a higher high, actually ended up making a lower high. And then we made a lower low within this structure. Still not breaking that low though, struggling to do so. Right? Every time we get close, we then have another surge and sort of a bullish momentum. Again, breaking that by a decimal, and now price has been retracing at the moment. So as we go to the 4 hour, then dropping down a time frame, we can see price giving us nice retracements, now beginning to give us really nice lower lows and lower highs. Now, what we can see is that price, when we take our Fibonacci tool here, we can see that price has the ability to come all the way into our lows. Now we can also see valid order blocks that have been left on these occasions. So we have this one here, we obviously have one here as well, but then we also have at the extreme low, if we drop down another time frame here, just to point it out, one at this low down here. Okay, now why would we expect price to get this low? We can expect price to get down basically to the extreme low, simply because of the fact that price has left imbalances, unmitigated order blocks, and also has left price without a return to a discount, a true discounted price, without a pullback essentially. And price will look to still deliver that discounted price before we look to move anywhere any higher really, and especially because we have left liquidity as well in this sense of equals, which we can see here. All right, relative equals there, that sort of trend line liquidity across there as well, as you can see here. Any more relative equals down here as well. So there's a nice amount of liquidity as well built to the downside to give us reasoning as to why we get there. But also on top of that, just to keep it quite simple, is we have our high, our recent high, to our recent low, and we're looking for that lower high move. Now that paints us towards pushing to the downside, at least to this region, and even further, really. So we'll delete that off, and we want to keep the charts nice and clean here. So you've seen the fib obviously bringing us into a discount, and now let's just focus on sort of our entry criteria. Now, what we can see is at this point, price has fallen off, right? It has made a new low, and when it was making that new low, it had no real deep retracements, right? It left no real deep retracements, and just continued to fall lower before we then had this impulse back up. And what we can see, we had this impulse, and then we began to slow down, correctionally pulling back. Now this is actually just before some news came out for the US dollar, and you can see that price did sweep the lows, grabbing liquidity, pushed higher. Now that push higher would have enticed a lot of buyers into the market, right? A lot of people would have started buying and anticipated price to push even higher from there. However, we have to keep in account that where we are in price, that we are now in a lower high region. So we're going to take our fib here. So we're now in a premium. Now this is the most premium we can get. And we have a completely valid order block right here. Okay, completely valid order block right there. Now, once we have that area, we can then expect and inspect price on a lower time frame. And this is where having a micro entry, so a lower time frame entry, a scalp entry if you will, with a swing target, gives you those higher risk to reward trades. Now let's remove this for now. So order block wise, if we go to our 5-minute time frame here, we'll go to the left. Just make sure we get to the right point. Oh sorry, way further left. Here we go. So as we can see here, valid order block that sits within our 15-minute order block and our hourly order block. Okay, now I'm going to take our order block right here. Okay, I'm going to see that dragged across. Now before we move any further onto that side of things, let's just also point out another reason and Confluence for this entry. We obviously have our key level. So we'll go back to the hourly here. Now, let's just make sure we get it right here. I think this was pointed out on the previous example. I think it's just like that. So you can see here, this level has been holding price as support resistance on many occasions. Many occasions. So even more recently, we've seen it hold as resistance. We've then seen it break above, failed to hold as support, broke back below. As it did, it retested as resistance, came back down. Now on this occasion, we actually ended up coming above into our order block, but closing below, which gives us great confluence in holding our trade, and also another confluence to look out for when taking a trade, because you can see even further back here, again, resistance. Again, it dipped below, but when it did finally move, it retested as support before moving higher. So it's a really nice, clean sort of analysis when we take into account everything from the higher time frame structure. So this is our lower high, price in a premium, price on a key level that sits alongside our order block, and then we can go lower. Now, two ways of entry. Obviously, there's the more aggressive style of entry, and let me just make sure this order block is on correctly. Oh, hello. There we go. Okay. So there's the more aggressive side of entry, which is obviously just using a limit order, which is what I did originally, but then I did get stopped out due to spread on the FTMO account, but managed to stay in on the funding talent. So more of aggressive style entry, because if you wait for more confirmation, which we're going to look at as well, then it'll just give you a bit more confidence as well in taking that trade also. So here is one style of entry, okay, which as you can see already at the lows here is giving us a 1 to 21. But as I said, let's look at the more confirmation. I'm going to delete that one off. We'll go for the confirmation based entry. So we have our order block, we have our key level, and we can see price again, news pushing price quite aggressively. Now another reason why would why should that bullishness not impact our decision? Number one, shouldn't impact our decision anyway, because the higher time frame holds more weight. That is the king, if you will, the higher time frame, the structure, compared to what's happening here on the 1 minute or the 15 minute. Also, price slowed down exactly at that key level and slowed down just below this order block. Now, if the news was going to push price higher, surely the news, which is that injection of liquidity and volume, should have pushed and broken that structure in that order block, rather than slowing down actually just before it. Now, we then get that lateral movement, sideways movement within our order block, okay, which is good as well. And now again, confirmation wise, here we have our minor structure for the 1 minute. We'll just mark that out for you. So here we have our minor structure. So what we could tell by that is, here we go. So as long as price stays above this region and doesn't break it, we stay bullish, right? We stay bullish as long as we stay above there. We did break that. So then that gives us our bearish sentiment, our bearish order flow, if you will. And what we know then is that price has left equals right here. Okay, price has left equals right here. Price did surge from here. So the confidence of taking this trade is essentially that we're going to take it from here. We know that it's from a higher time frame perspective, from a 4-hour lower high, and therefore it can make a 4-hour lower low at the least, let alone obviously completing that daily leg as well that we've plotted out, and we're going to take a look at again. However, at the least, we know that we can get a trade retracement to this order block where we had that push from, and at least take these equals, giving us a very nice, at least 1 to 5, maybe even 1 to 10 trade. All right. So if you mark that out, what does this show us? Here's our order block on the 1 minute then, off the back of breaking structure. We can then use our order, and to be fair, it gives us the same exact entry. All right, same exact risk to reward, 2.5 stop loss, and or reward wise, obviously to the low gives us a 1 to 6 to these equal lows. Even to this low gives us a 1 to, if we just put it just above, 1 to 11. Yeah. Now we can follow this one. We can follow this trade here with the more confirmation based entry. To be honest with you, it really just depends on your style of which one's going to be better suited to you. Simply because if you have more times on your hand, if you have that sort of time to sit on the charts and sort of wait for price to play out like that, and wait for those breaking structures, then you can be more of a manual entry and wait for that more confirmation. Also, you have to think in terms of if you will hesitate in the moment, because at the end of the day, though, that's a 1 minute chart. Price moves extremely quickly. If you hesitate in this moment, it's going to cost you in your risk to reward. Yeah, the price can move very quickly, and therefore, if it was to move quickly, by the time you press sell or buy, has it moved an extra few pips, and now you might have the wrong lot size on, meaning you're then risking the wrong amount, and so on and so forth. So you really have to ask yourself, are you more suited to having just a limit order on, accepting your risk, but at least knowing that you'll get tapped into your trade, or manual entry? Now, don't get me wrong, it can be a combination of both, similar to myself. So that FTMO got stopped out on the spreads with the limit, so I had to then enter using the confirmation-based entry, which I'm glad I did, obviously, because if I didn't, I would have been very annoyed to miss a trade simply because of spreads. Right? Now, let's finish up here then when it comes to the target and how this trade, why, number one, it makes sense to hold this trade, how it can give you such a risk to reward. Now, don't get me wrong, I would imagine that majority of people, unless it's on a personal account, especially those using, especially one using like prop firms, so FTMO funding talent, obviously you can't hold over the weekend. So therefore, taking profits is much wiser, at certain points. So obviously I built a 1 to 5 system where majority would take profits at 1 to 5 and then leave the rest to run. Now, if it's a personal account, however, this is the sort of trade you can hold and take, and it is completely possible. So it's not a problem at all. But it's just being realistic as well, just understanding that, you'll see online a lot of people saying 1 to 100 or 200 or whatever it may be. The majority just don't explain that they take a lot of the volume off their trade. When it reaches a certain amount, it might not be 1 to 5, it could be 1 to 10, it could be 1 to 20, whatever it may be, but they take the majority of volume off. Because you can imagine seeing a 6-figure trader, as an example, right, doing 100% per trade, right? the psychology required to hold a 100,000, for example, let's say if it's 100,000 starting balance, the psychology required to hold a 100,000 starting balance, a risk of 1,000, but then to hold another 100,000, the psychology is immense. Now, not to say that no one can do it, not at all, but it's just something to take into consideration, not to overinflate your expectations, not to overinflate what is expected out of the market. Always remember that the average return, in business, in the stock exchange, even in business as a whole, so like even owning, say, a convenience store or even a food outlet, is between 10 to 20% a year, right? And that's what most investors and big business people are happy with. So don't allow, say, even a high risk to reward system like this to cause you to feel that greed and that need to have 100% plus returns, multiple 100% a year. Because not that it's not possible, it's just not realistic long term, and it's not needed, it's not necessary, right? And at least what you should do is target first what's realistic, what's new to you, right? Maybe that's your end goal, 100%. That's completely acceptable. However, if you've never made, say, consistently 20% a month, how are you going to aim for 100% when you've never hit 20? Hit the milestones first consistently. Hit 20, hit 30, hit 40, and so on and so forth. All right. Same with the trading accounts. If you've never traded 100,000, don't just jump there. Even with these prop firms, don't just jump there. Get used to 20. Get used to 50. And consistently do it. Let your mind train and get used to the elevation in the numbers, the reward, the risk as well. Of course, don't forget the risk as well. Getting used to from risking, say, £100 on a 10k account to risking 1,000 now is 10x up on 100,000, right? You have to allow your mind to adjust and get prepared for such numbers and then changes along the way. Okay, little words of wisdom there in mid breakdown. Sorry about that. But as I say, so at this point, because we've got the bar replay on, at this point we've got a lower high. We can see price at least getting to this region to make that lower low. Right now, we have those equals, we have that trendline liquidity, but also, as I said, we also have the fact that price has not returned to a premium here, hasn't given us much of a deep retracement, and therefore we can expect price to get there. Now, we may have pullbacks at the least, and this is where we'll talk about managing the trade as well. But our target could at least be this 1 hour block here, giving us a 1 to 55, or even to our next block, which would give us a 1 to 63. Okay, 1 to 63. I think with the limit order, it's a 1 to 80, but even 1 to 63, absolutely fine, and still great results. Now, as we can see here, we'll let price play out a little bit here. Now, price did break our low, making a lower low, came back up, took the highs here, this liquidity here, into a, if I check here, into some form of smaller block here. However, we do get that transition, so we do get that break of structure. We get our return to the high for an entry, so 5-minute block right here, that's a compounder trade, and then continue, right? Same again here, another order block right here, holding price there, so another compound potential, and this again, greed. You need to think, do I need to compound? If you're a short-term trader, you might have taken majority of your trade off, at these lows. When price came up, you compounded another position, and then looking to take the majority off your trade at new lows, right? So when price does finally break down, we're on the 5-minute here, let's just go higher. When price does finally break down, again, taking majority off, for example. Now, the original trade though, however, is now playing out. We're making that lower low, fantastic. Made that lower low, right? Price then comes back up, continues down, that strong momentum. Okay, now we're approaching our next order block. Again, same thing. Same thing, straight into a new low, tapping that final order block, and this is pretty much where we are now. Now the interesting thing is here, I'm going to do another trade breakdown on this particular trade, right? On this particular trade right here, and hopefully that's going to give some insight into, how, again, similar, it was off the back of news. There's actually the FOMC that was yesterday, and yeah, it was a very good trade. A trade that was actually planned out from the start of the week, and I thought it was going to come on Tuesday, didn't, and ended up coming on the back of FOMC, and it was absolutely fantastic trade. And that just shows you like how I had this trade originally, the one that's marked out here, but that was on a funding talent passing that challenge. Therefore, I don't think I needed even to hold to a new low. I think I was able to close here, but the analysis was there. The possibilities of holding that trade were there as well. And in between though, we've taken the next leg down, following the higher time frame structure. So just to recap, we've taken a trade here from a scalping basis, so a scalping entry, but our whole viewpoint when it comes to the reason for entry, the confidence to enter, and the confidence to hold our trade all came from the higher time frame. The 4 hour, the daily, even the weekly as well, understanding where we are in price, where we could be looking to move and why, and then holding our trade accordingly. Now when it comes to trade management, again, taking off your partials at certain key areas is a smart thing to do. So even here, look, after we made that first 4 hour lower low, it's smart to take something off the table. Pay yourself as a trader. We come into potential order block and key level, price could easily then go and make a new high should it want to, right? Yes, we have our confluences for these lows, so therefore we are confident to hold, and that's why we don't close the whole trade, right? And if you're really confident, don't get me wrong, you can hold the whole trade. If you really feel confident that price is going to move all the way down and you're accepting your risk, nothing wrong with that at all. Nothing wrong with that at all. But again, if, however, you not have a lack of confidence, but want to pay yourself, want to make sure you're paid in some way for your hard work and for your trade, then of course look to scale out as we get to the lows, right? And yeah, absolutely fantastic trade, 1 to 63 in the end. I know obviously again I haven't got into deep details into the actual concepts of say order blocks, liquidity and so on, but that's what we do in the Viper group. Our website will be out on October 9th, so keep your eye on that. There's going to be different options available for everyone. If you are interested or have any questions, again, please feel free to use the comments. I always reply as soon as I can. But yeah, let me know your thoughts below. Click subscribe, smash the like button, and catch you on the next breakdown.